Welcome to the Language of Business, Basic Finance Part 1. I'm Jania Bailey from FranNet, and I'm going to be doing a series of articles on the Women's Core over the next several months where we really try to help you understand the language of business. The reason for doing this: how many of us have been in business meetings where the participants started talking about financial statements and numbers and ratios, and you felt so totally left out that they might as well have been speaking a foreign language? My guess is the majority of you are saying yes, yes, yes. Unless you're an accountant or a banker, you've not been educated on this language, and it can be very frustrating to you. It is very important that we get a handle on this language because it is a unique language, but it is the universal language of business. If you are going to be a successful business owner or successful in your career, it is imperative that you learn this language and you be able to converse with others regarding finance. So, we're going to start with the very first part, which is the balance sheet. If you pick up a company's financial statement or financial report, the first section will always be the balance sheet. Now, the balance sheet is pretty basic also because you may have been asked at some time to prepare a financial statement for a bank. You may have been applying for a personal loan, and they will say, prepare your personal financial statement. What that consists of is the balance sheet. So that's where we're going to start this month. The balance sheet is nothing more than the listing of things you own and what you owe. The things you own are called assets. So within a balance sheet or a personal financial statement, you will see a section that says assets. This is where we list everything we own, anything you have of value. What we owe, our debt, is also called liabilities. So there will typically be a section for assets and a section for liabilities. When you take your total assets and you subtract your liabilities, the difference is your net worth or your equity. Now, let's think for a minute in terms of, let's say you just bought a house and you paid $200,000 for this house. That is a $200,000 asset. You borrowed $100,000, so you have a $100,000 liability. So we have the $200,000 asset, the $100,000 liability. The difference, $100,000, is your equity or net worth. So pretty simple. Just remember the formula: assets minus liabilities equals net worth. And you go back and you remember it's called a balance sheet. The assets have to equal the liabilities plus net worth. It has to remain in balance. Another important thing to remember about the balance sheet: it is a snapshot of your financial condition one day in time. It is only accurate for the date on that balance sheet. It reflects what you own and what you owe that day. Remember our house: $200,000 asset, $100,000 liability, $100,000 net worth. Well, if we sold that house tomorrow, our balance sheet would look entirely different than it did the day we owned it. So you can see the balance sheet, think of it as a snapshot. It freezes your financial picture for one day. Some specific business terms that you will hear in discussions in those meetings about balance sheets: current assets. So not just assets, but current assets. Well, current assets are those things that can be turned into cash quickly. That would be cash in your checking account. It might be investments. In a company, it would be accounts receivable, those things that should turn to cash within the next operating cycle. You'll also hear fixed assets, or they may say capital assets, or long-term assets. Those are things like real estate, equipment, furniture, fixtures, things that you're not planning to turn to cash within the next operating cycle. So current assets, those things that should turn into cash within the normal course of doing business in a reasonable amount of time. Fixed or capital assets, those things which we do not expect to be turning into cash right away. You also have current liabilities. Well, if current assets were those things you expected to turn to cash quickly, current liabilities on the flip side are those things that you're expected to pay within a normal course of operations. Typically, those liabilities that come due within 1 year. Those would be the current portions or the 1 year worth of payments on any debt, credit cards, and accounts payable. Long-term liabilities, on the other hand, are those portions of your debt that will be payable after 1 year. So it would be all of those payment amounts on a loan that are due after a year from now. The other terms, instead of hearing net worth, you may hear stockholders' equity or retained earnings. These are all part of the equity or net worth of a company, but they're just called different things. And I know it's very frustrating. Why don't they use the same terminology all the time? Why can't it just be things you own and things you owe? Well, again, it's that language of business. So just remember assets, things we own, and they can be current or fixed, or they may call capitalized assets. Things we owe, it's our liabilities, and it can be current or long-term. And if I take my assets and I subtract my liabilities, what I have left is my equity or my net worth. Could also be called stockholders' equity or retained earnings. On this slide, I have a very simple balance sheet breakdown to show you, where we've listed cash, investments, real estate, other assets. So we're going to get a total asset section, and then we list our liabilities. And that would be, again, those accounts payable, notes payable, long-term debt. So we get our total liabilities. Assets minus liabilities is going to give us our net worth. If you see a typical company balance sheet, assets will be in one area, the liabilities and net worth on the other section. It will either be a top-bottom presentation or a side-to-side. But either way, your assets will equal my liabilities and net worth added together. Assets minus liabilities equal net worth, or assets equals liabilities plus net worth. I hope this little presentation has been helpful. This is the first step. Next month we will cover in phase 2 or part 2 is the income statement. This is Jania Bailey from FranNet. On behalf of the Women's Core Network, we appreciate you joining us. See you next month.